Glad you're here, and I appreciate you being here. Unlike in the last couple of years, we're going to do a little change in our format. We're going to have each of our vendors come up here and talk about why they're here, who they are, and what they can provide for you in extra coverage as we move forward. We're going to start with Globe Life.
I'm Tammy. I'm with Globe Life Family Heritage, and we are one of your supplemental insurance choices. So most people look at me and they say, "What is supplemental insurance?" And that is what pays you directly. So let's say you get hurt. You can't work for a few weeks, a few months, longer. How do you pay your bills? Disability takes a while to kick in, and it's not always paid out right away, and a lot of times it's about 60% of a check. So that's something that we can fill that gap for you. We also cover all forms of cancer, all forms of heart disease, any type of ICU visit, and also hospital. And we are the only company that gives you your money back if you don't use the coverage. So if you get a cancer policy, you never use it. Like my client in Sierra Vista, she never used her cancer policy, and I got to hand her a $12,000 check the other day. She was delighted. So just so we can make this fun, I like to throw out little rubber duckies. So if you couldn't work because of cancer, heart disease, a serious accident, what bills would you still have to pay? Start us off. House. Woo, all right, who else? Utilities. Vehicle payment.
Cell phone goes on.
You said cell phone? Did you, sir? Okay. Oh, all right, anything else? Yeah, no, you're going to be trying to catch it. Anything, how about other bills? Who has car insurance? Yes. Who has, what else? Do we eat? Do we go to the grocery store? Well, God, we all got to put gas in our cars, right? Let's kill it. Food. Whoops, sorry, that one went a little sideways. My softball arm is rusty. Anything else? Credit card, very good. Now, most people think that they're going to take it from their 401ks or maybe their investments, but there's penalties involved unless you pay it back. So instead of causing yourself heartache, come talk to us. We always say that we're here for you when life happens, but you got to talk to us before life happens. Camming Family Heritage, thanks.
Thank you.
Thank you.
Thank you very much. Homes for Heroes.
Hi everyone, my name is Tisha Rodriguez and I am with Nexa Mortgage, and we are proudly here today sponsoring our Homes for Heroes program. This is a program that we sponsor ourselves and are super excited about. We collaborated with title companies, real estate agents, and then us as a mortgage company. We help anyone who we deem our local community heroes, being firefighters or EMTs. We have police department that we see here today, and then also our military, any medical professional or healthcare provider, and then also our teachers. So these are ones that if you know anybody that is looking to buy or refinance their house, we actually give them cash back at closing. So we reduce our fees, we reduce the title company reduces their fees, and the lender and the real estate agent reduces their fees, giving you cash at hand at closing. That is yours to do for whatever you want to do. So it is a program, again, that we sponsor. There's no commitment, no sign-up fee, no nothing, but we are very happy to do that because you serve us, so we want to serve you and give back to you. So if you have any questions, feel free to see me at the table. That's it. Thank you.
With Aflac, come up.
Hey everybody, how are you guys doing? My name's Nicole. I'm here with Jackie on behalf of your guys' Aflac. So I know we have a couple people who have Aflac in the room. Have you all heard of Aflac? Maybe seen a commercial with a duck? Perfect. The marketing team can still keep their jobs. So Aflac is going to pay cash directly to you. It doesn't matter whether you have insurance here through the city or if you have insurance because you're a vet or you have access, TRICARE. None of those things matter to us because that cash goes directly into your account. You're able to use it however you would like. We have 3 plans available for you guys this year, and these are all guarantee issue. There are absolutely no health questions. You're able to sign up even with pre-existing conditions. So the first one is going to be our hospital plan. That one's going to pay if you're admitted to the hospital. If you need to be in there for at least 18 hours, you're going to get a cash amount that you get to pick. So that can really help with those higher deductibles, those out-of-pocket costs that you have when you're looking at your insurance and deciding what you're going to sign up for. We also have our cancer insurance. This is one of my favorite plans. This is guarantee issue for you guys this year. That's a new thing that we got approved for you. So that means you can have cancer, you could have had cancer in a recent past, you're still able to sign up for this coverage. It's going to pay when you're diagnosed with cancer, pays every single month that you're going through treatment, $1,600, so that's over $19,000 a year. Pays for second opinions, pays for surgeries, hospital stays, skin cancer. But my favorite part about it is it also pays for transportation and lodging. So if you were diagnosed with cancer, there is a good chance you're probably going to be going up to Tucson for some of your treatments. It's going to pay for your mileage traveled there and back every single day that you go up there. So if you have a child or any dependents that are under the age of 26, they are covered absolutely free on this plan. So if you sign up, we're going to automatically cover them. They actually get double the coverage. They get paid $10,000 for that initial diagnosis. But I would like to have a little fun. You guys have seen a commercial with a duck with a broken wing before in the past? Who can I pick on? Who's willing to be my guinea pig? You win a duck. Okay, what is your name, sir?
Robert.
Robert? All right, so what you guys may not know about Robert, would you like to stand up first, Robert? Come on up here. Look at this big, strong guy. So Robert's dream is to do the Cooper's Hill Cheese Wheel Race. Have you guys ever seen that before, where they have that giant wheel of cheese that rolls down this insane hill in England and people go flying after it? Yep, perfect. So this is his dream, to be able to go and do that. So so next year, he's gonna make it there. He makes it, and he's gonna win. Look at him, right? Of course he's gonna win. But in order to win this race, you really have to throw yourself down this hill. So he tumbles all the way down to the bottom, beats everyone else, and wins. Congratulations.
Thank you.
Unfortunately, with that tumble, he had a couple injuries, and this is kind of set in the middle of nowhere. So they had to call out the helivac to take him over to the hospital, check him out, and make sure he's going to be okay. So with his accident plan that he got in place this year, he's going to get $2,500 for that helivac. Then he's in the hospital. He's going to get $2,000 for being admitted to the hospital. They keep him there for 4 days, so he's going to get $350 a day, another $1,400 for that. He did dislocate his shoulder with his tumbles down the hill, so he's going to get $2,000 for that dislocated shoulder, and he broke his wrist, so another $1,000 for that broken wrist. He did get a bit of a concussion, so we're going to pay you $1,000 for that concussion you got. And, you know, he got a little Band-Aid on his head because he got hurt for that too. So another $100 for that little cut you got there. Later on, because he has to get back up to fighting shape, he is going to do rotator cuff surgery to get that feeling better. So that's another $1,500. But he's going to be back up to win again next year, because once a champion, always a champion, clearly, right? So he's going to go to some physical therapy. He's going to get paid for every single visit to physical therapy. If he goes 18 times, he's going to get $900 for that physical therapy, $50 each time. There are some doctor's follow-up visits. So if he goes to 6 follow-up visits, that's another $300 there. And then after this incident, he starts getting a little PTSD every time he sees some mac and cheese. So we're going to let him go talk to somebody about that as well. And he's going to go talk to somebody 3 times and get another $150 for that. Jackie, how much did he get for his accident plan there?
$13,100.
Okay, so he's getting over $13,000 on this. It does cover, of course, those everyday injuries, as well as if you choose to go out and race cheese wheels down a giant hill. But this plan for you guys costs $7 a week. It is so inexpensive. You're able to sign up. Thank you so much for that, and good luck next year in the race.
All the money I'm going to get back. It'll pay for my trip back to England
Exactly,
6 times over.
to fly again, to race down again. So that's how our plans work. They're going to pay you minor injuries, major injuries. But one thing I do want to make sure is we owe over $14,700 in wellness benefits to employees here at the City of Benson. So if you have an Aflac plan, come over and talk to us. Our lucky big winner has over $2,900 in wellness benefits available to them. So you get those every year regardless of whether or not you're hurt. So please come stop by and we'll help take care of those. Thank you guys.
Good morning, everybody. I'm Allison Lombard with Regal Shield. I am not going to roll down the hill with cheese. My big thing is I might go to the flower show and do something like that. But yeah, no cheese for me. So the city offers 2 voluntary benefits, Legal Shield and ID Shield. Both of them are payroll deduction. We'll start with the legal. If you didn't get a flyer, I've got some more in the back. But basically what this plan does is it gives you the ability to pick up the phone, call into your law firm, speak to an attorney that's experienced in a particular area of law that you might need. It might just be asking questions. You might want to know what a statute says. You might want to know what your rights are in any given situation. But it doesn't cost you anything to pick up the phone and call the attorneys. They'll review documents before you sign them. So please, if you're leasing, renting, buying, doing any of that crazy stuff, make sure that you have your attorney take a look at it, because obviously an attorney has written the document. It's just not your attorney. We also write letters, make phone calls on your behalf if the attorneys feel that that's a benefit to you. The part that I like the most about this plan is the member and the member's spouse each get a standard will, a living will, medical power of attorney, and financial powers of attorney. So if you have not done those documents and you're putting them off, you think it's too expensive, you think it's too cumbersome, you think it's going to take too much time, definitely take a look at what we've set up. It's very easy. It's a questionnaire. You can also call the attorneys if you have any questions that you might get stuck on a particular item, and go through that and at least have those documents in place. If you feel that you need something more, if you're going down the trust path, and again, it's a great conversation to have with the lawyers. There are fees, but at least you know what you need, what's going to be appropriate for your family. Driver situations, moving traffic tickets. We have a IRS audit in the event that you get that love letter from Uncle Sam, and 24/7 emergency access if you're going to be arrested, detained, children being removed from your home. You can call the emergency number and have an attorney on the other end of the line. Jumping quickly over to ID Shield, I mean, it's cybersecurity, data breaches, it's out there, it's running rampant. There's nothing you can really, I hate to say this, I don't want to be a Debbie Downer, but there's really nothing you can do to prevent it. The biggest thing you can do is to have somebody monitoring all your personal identifying information, making sure that those things are not out there, and if they are out there, working with a licensed investigator to get them corrected. We have a lot of people that we're helping with credit freezes, fraud alerts, just loan papers, things like that. People are opening, loans in other people's names. The biggest thing is they're using your driver's license, your medical information, and possibly your social security numbers. And I always tell people, they don't want your money, and they don't want your cash, because once they take the cash and they spend the cash, it's gone. They want that information about you. They can sell your driver's license again and again and again. Social security card, same thing. They can bill Medicare for medical devices. It's all out there. So with this program, you let us know what you want us to monitor, and we set that up for you, and then start looking at the dark web, public records, etc. Pricing is down here. We do have the QR code, so you can do a deeper dive on what's available. And on the back, we have a member perks plan. So I say it's like a discount shopping. So approximately 400 vendors that are offering discounts, one-time specials. You become a member of that when you sign up either for Legal Shield or ID Shield or both. That way you can start saving money on things that you would normally buy, whether it's electronics, travel, tickets, anything like that, Invisalign, all of those types of things. Go in and take a look. If you're going to spend the money anyway, take a look at member perks to see if there's any savings. So I'm in the back. If anybody has any questions, if anybody here is already currently enrolled, I just want to make sure that we've got your current address and phone number and all that, so come back to see me in the back. Thank you.
Hello, it's me again, fully recovered from my cheese-related incident.
quick show of hands, how many of you know anyone personally who's been flown into either a helicopter, either Benson into Tucson, Phoenix? Yeah, surprised more of the police officers aren't aware. How many of you are aware of how much that flight cost? Not a very cheap bill, is it? No. I represent PHI Air Medical. We have 5 air bases in Southern Arizona. We have 1 in Oracle, 2 in Safford at the hospital and the airport, and then 2 in Sierra Vista at the hospital and airport. We fly people out of Benson all the time. And long story short, those bills, again, aren't expensive. And so we started a membership program, which I represent all of Southeast Arizona, where for a fairly inexpensive fee, it'll cover you and your entire household if you need to get flown into Tucson, Phoenix, somewhere else. If we flew you, you don't get a bill. Regardless of what insurance does or does not cover in the case of that situation, because sometimes they tend to be a little bit picky about what they do and do not want to cover, you do not get a bill. We eat that cost because you're a member. Or if a family member got flown, we eat that cost. So pretty simple, pretty straightforward. If you have any questions, concerns, thoughts, want to say hi, I'll be right there in the back. Thanks.
If I can add in also on PHI, the city just signed a lease agreement for them to move to the Benson Airport as well.
Correct. Yep.
So,
Well, good morning, everyone. I'm Clark Crowder. I'm with Nationwide Retirement Solutions. Most of you know who I am already. I've been doing this for years for you. We handle the 457B deferred compensation plan for this. It's your voluntary or supplemental retirement account. It's a 457B. Now, I know a 401k was mentioned in the past, but because you're governmental employees, you use the 457. The difference between the 401ks in the world and the 457s is there's no age 59 and a half rule. So monies that come out of your deferred compensation plan at any age will never have a 10% early withdrawal penalty. You can enroll, increase, decrease at any time throughout the year. There's no open enrollment period. I kind of like the idea of throwing things out there for questions too, but I don't think I should be throwing these glass breakers out there, okay? I mean, somebody's going to get hurt. But I do have glass breakers in the back. I do have first aid kits in the back in case you get hurt. So come back and take some of the giveaways, go around to the vendors, take them all, because we don't want to bring them home. But the deferred compensation plan, I know many of you already participate in it. There hasn't been any big changes to the deferred compensation plan. There's been some changes for the public safety individuals, and I can cover that with you if you want to come back to the table. That way I don't bore everybody else with the public safety changes. Again, I'm Clark Crowder with Nationwide, and we handle the deferred compensation plan. So please come back, gather the information. Thank you.
So good morning, I'm Talia Glock and I'm from Benson Hospital. I am the place where all of you guys will go if you get in an accident, doing a mac and cheese race or whatever this may be. So I'm just here just bringing awareness of what we have in the hospital. It's not just an ER and inpatient services. We also have a specialist like cardiologists, dermatology, general surgery, all kinds. I have all the information in the back. We have primary care. We have inpatient and outpatient physical therapy and occupational therapy. So please stop by and we can talk about it. Oh, also we have a cardiac rehab. That's one of our newer ones. Infusion services for outpatient and inpatients as well as wound care, respiratory diagnostics. There are also outpatient services. So we can just chat and thank you.
but now we get into the fun, maybe not so fun part. I could go over the budget if you guys want that, but we won't do that. I appreciate all the vendors coming in. If you have not signed up for any services, if you don't understand the services, make sure you sit down and have a talk with them. Especially if you're young and in your career and you don't quite know how the rest of your next 40 years of working is going to go, these individuals around the room, they will help you get there. So the city is, in our benefit package we offer is a little bit different. It's year to year, and changes happen year to year. This coming year, we had to make some tough decisions on where we're going to go with our insurance package. And then when Al comes up and does a full presentation for you, I just kind of wanted you to know some of the decisions that I had to make regarding insurance benefits this year. So we're actually going to have an offer three different plans. One of them is the HSA plan, another one is the PPO plan. And then we're gonna have another offering as well that includes labs and x-rays as part of your PPO plan as well. One of the decisions that I did have to make this year was because insurance costs rose quite a bit. What the city was paying for individuals across the board and for families and for spouses, we had exceeded the amount of money that was in our budget and what we are allowable to do. So this year, single employees are no longer 100% covered by the city. The decision that I made was an 80% coverage across the board, that the city covers 80% across the board and the employee will have to cover the 20%. So, for example, on health HSA account, an employee, this year your per paycheck payment's gonna be $45.14. Total premium for a year is $451. If you're on the PPO plan, it's $49.06. But across the board, the family plan, the employee with spouses plan, or parent with children plan, almost tripled in price. And when we're looking at the economy, looking at everything else across the board, I think that's why I said the best decision to make was to ensure that we could, everybody in the whole city, the 100 employees with the city could afford to pay the insurance premiums. Rather than, because they're gonna again talk about it. I wanted you guys to know that came from me. That was some decision that I had to make across 80%. One of the other things behind that was it reduced our HRA reimbursement amount of money because for the 80%. So we're gonna have to, myself and Megan and the other department heads, as we move through this year, we're gonna have to look at finding money to make sure the HRA gets paid, because your benefits are important to us. We're gonna make sure those things still happen and not put a cap on the HRA benefits you have. For instance, if you hit your copay or deductible amount, there's a certain limit on that, and then the city would pay you back. That's an HRA plan, and so that we'll make sure that that is covered. So it's just a small change on mostly on the employees, but the family plan was going to go up tremendously, and that's something I didn't want to do with families and people with spouses, and also with if you are a single employee and then you decide to get a family, have a child, then the rates will go up tremendously. You want to make sure that happens. Question about it. I talked to a few people about this already, but I wanted to make sure you guys were aware of it, and it came from me. You can always talk to me about it. But Al is going to come up here and do the presentation in a more formalized fashion.
No problem. Thanks, Chief. We appreciate it. Nice to see you all again this year. Al Thunberg with ESG. I know we've spent time in the past. Obviously, today we're going to cover a lot of ground. You started to hear some of the information right here. Before I jump into that presentation, what Chief has obviously had to do, these numbers don't just come out of nowhere. These numbers come because we've had a pretty tough healthcare year this year. We had a lot of major claims. We had some things. And whether you think insurance is confusing or not, it comes down to some simple techniques. It's how much do you pay in claims versus how much do we collect in premiums. It's a math exercise. So what I always like to make sure you know is that when you go to the hospital with a doctor or have a procedure, there's money involved, and it's big money. And this year we had a couple of big scenarios that obviously drove these costs pretty high. And so management was faced with a real challenge to figure out how do we handle this thing. Now they had a couple of choices. They could have passed all that increase on to you, but they did not. But they found a way to balance these costs a little bit and let everybody share in the solution. What I like to always emphasize when costs go up, it's for some of you they may have, on the employee only specifically. Those deductions, while 4514 is on the HSA plan, remember those are deducted pre-tax through payroll. So when you see your deduction of 45, remember what pre-tax is. That means you pay no federal, no state, no FICA, no Medicare tax on the money. It really costs you about $30. So it's much below these numbers. I like to make that point because it's important that you realize it's not all coming out of your pocket, that the fact that the government gives us this choice to go pre-tax saves you all about 25 or 30% from these values. was a tough choice, but on balance, I think we did a good job trying to really handle what was almost a 20% increase this year for the cost of the plan. Okay, so I'd like to make that point. How is Benson's benefit plans compared to other municipalities and cities and even school districts? You have a great benefit plan. Let's face it, if you have, and we're going to go through some details here, but if you have a $50,000 claim in a major medical event, the max you will pay is $1,400. If you have a $500,000 claim, the max you will pay is $1,400. And you may have some drugs and some co-pays and some other incidental things that come with that. Those are things you will pay in addition. This protection is fantastic, and the city has done a great job keeping those costs very low. So I'd like to make that point up front because it seems like, oh my goodness, we're taking on more costs. You have an excellent benefit plan. Excellent. If you haven't had a healthcare event, the numbers are big. When you go in the hospital, the numbers are big. The procedures that are performed, they're unbelievable. You can run up a $100,000 bill in no time. The insurance is very valuable for that reason. So I know some of you have had those experiences before. It's true, and obviously you need to recognize that. So they made some tough choices, and that's where we're at right now. Long story short, you've got some excellent options here to select from today. When we get through the process of going through the plans, we're going to be here this afternoon as well to talk to you individually if you want to exercise some creative thoughts on how you should approach the process. Okay? So hang with me. It's not all that bad. We can get through this and obviously do this so that it's going to not impact you or your family financially. Today we'll cover medical, dental, vision, life, and disability programs. We're going to talk about those pre-tax accounts again. Remember, we have something called, and a lot of you have heard this, so I'm going to keep moving pretty quickly. Those of you that are new, you want to explore it further, see us after the meeting as well. Health savings accounts, flexible spending accounts. Those of you that have had the debit card to use for your out-of-pocket medical expenses, those plans are obviously still in place and remain in place. And then we're going to go through some of our tools as well. Our plans are staying with Aetna for another year. Aetna's a good provider. They've done good things for us over the tough claims that we've had, so it's been working out. What we like to always point out to you, if you haven't gone online to Banner Aetna, which is their website, find your doctors, find your hospitals online. It's all out there. I know we've become better over the years at doing our search work online. Try and explore those. Remember, we want to stay in network whenever possible. Who's in the network here? Looking at some of the options here. If you need to go to Mayo because you got a cancer diagnosis or something severe you want an opinion, you can go to Mayo. This network is as broad as you can get in the state of Arizona. So you're in good shape that way. You want to go to Tucson Medical? You can go there. If you want to go local, you can go there too. Okay? You got nice broad coverage, but you got the best of the best in the network as well. Okay? Some of our numbers there, but we'll go on to the plans. So which plan is right for me? So we've talked about these in the past. You're going to hear two concepts here today. You're going to hear about PPO, the preferred provider organizations. They're a little different than the other plan that we hear of and offer here called the Health Savings Account, or the HSA. We'll differentiate those for you as well. Remember that the plan has a deductible. Does everybody know that term, deductible? That's the amount you pay before the insurance kicks in. But remember, City of Benson offers you a reimbursement of your deductible, and we do that in a way that is tax-free to you. So there's a strategy involved in this, but that $5,000 deductible will be reduced down to $1,400 after your reimbursement. We're going to show you some about that. For family, it's 2 times the deductible. So if you're a family of 4, if Al gets sick and it incurs his deductible, and Jill, his wife, gets sick and incurs her deductible, the rest of the family members, everything is settled. It's 100% covered at that point. So you only settle 2 deductibles per family, those of you that have dependents online. So here again, we're pointing out after the HRA, which we'll talk about, $1,400 for a single. For a family, the maximum out of pocket you would go if you had 2 major medical events in your family. We hope not. If you do it, the max you would pay would be $2,800. The PPO is a good option for those of you that expect health care. I mean, we all have a different healthcare profile. I'm asking you to think creatively here. If you're male and like us, stubborn males, we don't go to doctors and hospitals. We should. We should do our preventative care. We should get our physical every year. Long story short, though, if you're going to have a lot of healthcare going on, the PPO may be the better option for you, and we'll explain that to you as well. Okay, next slide. This is your HRA. On the individual column here, the employee, if you have a major medical event, this is an event, you go to the hospital, you have a major imaging issue, you're actually going in and having a procedure performed, you will pay the first $1,000 of that procedure. After that, it's split 90% to the city, 10% to you, up to a maximum additional $400. So the $1,000 first dollar and $400 on the back, $1,400 total. If your family has 2 events, 2 times that amount is what you'll pay. Okay? The HRA is there for a reason. It's a strategy we use to keep the premiums lower. And if you do have a healthcare event and we give you a check, and we're going to give you a check if you have that major medical event, the check is tax-free. It doesn't go to your income tax return and you have to pay tax on that. It's a tax-free reimbursement. It's very important stuff. Okay, next slide. This year, we had noticed a trend going on here, and this is something we're going to give you the option to do. In the prior plan year, which, by the way, that PPO is the same plan we had last year. So if you run in the past, that plan 1 is identical to what it was last year. Nothing has changed. One change was introduced this year. It's a second PPO. This is the new product that we're bringing on. And what it will do is if you have recurring labs, blood work, if you will, you can now, that used to go to deductible and coinsurance. If you have a lot of those going on, we're now offering a $0 copay. It won't go to your deductible, and it'll be a $0 copay. You go have your labs run, you won't have to pay the additional deductible dollars. So we call it a buyout, or an increase in benefits, if you will. It's going to cost you a couple bucks more. If you're one of those that is tracking a condition that requires recurring medicine or recurring blood draws, this plan might be one you want to consider. That's what we were seeing as one of the trends and one of the actual frustrations out of some of you in the audience here today. Okay? Think about that as an option. You'll see the premium differences are there. On the L is the labs, the XR are X-rays. $0 copay if you have to have an X-ray. Now, these are not the complicated imaging events. It's not MRI, PET scan, CT scan. Those are still deductible big medical events. This is for your routine X-rays. You know, Bobby goes to the ball game, falls, breaks his arm. He's going to have an X-ray. The X-ray is going to be a $0 event. Okay? So this is an option. The PPO2 plan, the second plan we're offering, is identical to the other plan with one exception. $0 copay for lab and X-ray. So don't be overly confused about it. The key thought, decide if it's right for you and your family, right? Do you have those kind of events? If you don't have them, don't pay extra. Remember, your annual visit, you run a full, what they call a CBC, a full blood analysis. When you go for your annual physical, I'm hoping everybody does that once a year to flush out the challenges you may be facing. Those blood draws are free already. That's part of preventative care that they give you 100% coverage for. So there's a couple of nuances here, and it gets confusing, I know. But normally, if you're just going once a year for your annual physical and they do your blood draw, that's included in your annual visit. It's the other recurring events that we're talking about for the XLR $0 copay. And we have those in the audience. So there are conditions that are monitored that way if you haven't had that before. Okay? HRA is attached to that plan exactly as PPO1. Let's go on. The plan I like to call, these are for our low utilizers, people who don't use a lot of health care. They're lower premiums, lower cost to you, and they give you a savings feature called the health savings account, which you can put money aside, tax-free, and accumulate it without any risk of losing the money. So the HSA plan has been pretty popular. We've got about 20 or 25 people using this plan. If you're a low utilizer of healthcare, you don't have a lot of events going on, this gives you catastrophic coverage, but it also comes with this HSA savings program that you can do. If you select the HSA savings account or the HSA insurance plan, the city puts money in your bank account. You get it, if you're a single insured, you're gonna get $300 of seed money that they put right in your account annually. If you're a family insured on the HSA, you get $600 right in your account. You can use that money for any of your expenses out of pocket for healthcare. No implications. So if you're a saver or an investor, or you like to put money aside for these unexpected healthcare events, the HSA may be a good option for you as well. In addition, we're going to talk about this a little bit more on the tail end. If you're an employee-only insured, you don't insure your dependents, if you put in $30 per month, they'll match another $30. So you not only get the $300 up front, you'll get $30 extra per month put in by the city in addition to yours. So it'd be $60 more per month between yours and their contribution. They are giving you a reason to consider this plan. It's a good program. And again, if you're a low utilizer of healthcare, when you get to $2,500, you can actually invest it like your 403B or other investment tools you have, and anything you earn in that account remains in the account tax-free. Okay, we'll talk a little bit, we're going to touch on that a little bit more later as well. Next slide, please. So the HRA, you keep hearing this term HRA, Health Reimbursement Arrangement. HRA is the acronym we like to use. This is that plan that will reimburse you if you have a major medical event and incur a deductible. We will reimburse part of that deductible. If you're on the PPO plan, go ahead please. Well, let's go through how you do. So how do I get my money first off, and we'll follow the PowerPoint here. All you really do, does everybody know that term EOB, the explanation of benefits? The EOB is the document that comes from the insurance company when you have health care. What does that show? It shows what they are going to pay. It also shows what you're expected to pay. That EOB that comes from the insurance carrier is submitted to the plan. We review it, we apply these rules, we send you a check. Every time that occurs, the reimbursement you get is tax-free, as I said earlier. So they work in conjunction with one another. Next slide, please. One more. Go ahead, one more. So if you're on the PPO, you've got the HRA, which is going to reimburse you for your deductible events. But you also have this other concept called the flexible spending account, which is available, which is the FSA. And that's the one that, if anybody's got their cards with them, you know, the card where you go to the pharmacy counter and buy your drugs and you can swipe your card directly. That card is part of the FSA program. That's a program you make an election to join or not. It's totally your call. Nobody else has to decide this for you. It's totally up to you as a voluntary benefit. You will use that with either of the two PPO plans. Either of the two PPO plans. That's the plan where you can put aside pre-tax money and use it for your out-of-pocket events. What are out-of-pocket events again? Part of my deductible may go there. Co-pays may go there. If I go see the doctor, I have a co-pay. If I go to the drug counter, I may have a co-pay. In addition, you may have drugs you purchase over the counter, like allergy medications. Those are also eligible for your FSA. So why should I put money in my FSA? We talked about pre-tax, right? If you put money in the FSA, it goes in there without paying tax on the money, it saves you about 25 or 30% of the money you put in there. So you get a little bit more buying power. If you have recurring drug therapies, join the FSA program. You'll have your credit card. It'll give you some flexibility in how you pay for those events. Okay? Everybody good? Here's a little overview on that. Again, 20 to 30% savings for the money you put in. You're going to get a debit card if you enroll. How many are in the FSA right now? Nice. Challenge the rest of you to try it out. We all have health care. We have out-of-pocket health care. We have over-the-counter health care. We have drugs. We have Claritin. We have all kinds of things we buy at the pharmacy. Those are the things that your FSA is good for as well. Flexible spending account also has that feature, though, that I always like to warn people on. Use it or lose it. right? Use it or lose it. So use it or lose it is exactly what it means. If you decide you're gonna put in $500, you're gonna put it in pre-tax. So to get $500 in the account, it's gonna cost you about $350, but you got $500 of spending. That's the benefit of pre-tax. If you don't spend the $500 in the year, then you would be subject to forfeiting that. We don't want you to forfeit the money, but we want to help you by giving you that 30% savings. That's very important to understand. You also have what's called grace period here, which gives you an extra 75 days to spend whatever you have left over at the end of the year. Now, we're coming into the end of the year, which is June 30th, for those of you in the plan currently. So you're going to want to make sure you review your account. We can get some balances for you today if you don't know what your balance is, so that you can spend the money in that next 75-day window. It's important that you get the money out of the account. You know, you can do things like I do. I've got glasses. If I had extra money, maybe I go buy a pair of glasses. Dental and vision expenses, in addition to the medical ones I've illustrated, are qualified expenses for your FSA as well. Okay? The maximum that you can elect this year is $3,400. It's whether you're family or single, but $3,400 is the maximum by law. Next up. And then there's another option as well. So that's your flexible spending account for medical expenses. Try a little bit. If you haven't been in that plan before, try a little bit. You'll be amazed how many times you pull that card out to pay for something that you're at the drugstore for. And this is a way for you to kind of help yourself save money in healthcare. I always like to say, healthcare doesn't really happen on a scheduled event or a calendar. A lot of times it's unexpected. If you have an election in your FSA, let's say you did $1,000 or $2,000, you can go all the way up to the number we looked at, $3,400. You can advance your entire election on the first day of the year. So let's say you have a big event, you got to go buy a drug that's $1,000 for some reason. You can pull out that FSA card and use it as a budget or available funds to pay for that unexpected health care. So it's not free. How does it come back into the account? You're paying for it out of every paycheck, right? Every check you're going to give us a little bit more money to put into that account. It's a payroll deduction, and it will be settled through the process. So at the end of the year, you paid in 100% of what your election is. We want you to spend all of that money too on your health care. And if you have extra, think about glasses, contacts, over-the-counter medications you can put on the shelf, other things that you can use the money for to obviously protect those dollars for your own use. Okay? Going to shift gears. We only have a couple people using dependent daycare. Is anybody in the audience right here using dependent daycare for their children while you go to work, any of that? Elderly parents, paying somebody to watch them? Okay. I'm not going to spend a lot of time on this. If you have a child or an elderly parent and you have to have somebody watch them while you go to work, you can put aside up to $7,500 tax-free annually. So this is another FSA program. It's available for you to use if you have that circumstance. If you don't have dependent children, this is not something you're going to be thinking about. By the way, I always like to emphasize the elderly adults. More of us are getting the responsibility of taking care of our parents in some cases. Can't leave them at home alone sometimes based on their condition or status. You got to have somebody come in and stay with them during the day. That's dependent daycare because you're caring for those folks. Okay? So if you need help or you have questions about those areas, let us know. Doesn't look like anybody here is impacted by that, so we'll keep moving. Okay, next slide. Go ahead, next one. We talked a little bit about the HSA. Now the HSA can only be, it's another debit card account, but it can only be used if you select the HSA insurance plan. That's the only option you have. It's only an option you have if you select that special insurance product. All right? Same kinds of expenses qualify. You can use it to pay for all of your out-of-pocket expenses, co-pays, deductibles, over-the-counter medications, RX, anything you incur, in addition to glasses, uninsured dental expenses, things you might pay for. All right, so it's the same kind of thing as the FSA. One big difference. If you go on the HS side of the matrix or the decision, there's no use it or lose it. You get to keep the money and roll it over from year to year. So there's no risk of loss on an HSA. But again, you must accept or enroll in the HSA insurance plan to have an HSA bank account. They're linked. Okay? So that's a little bit confusing, but again, might be viable. And again, if there's any investors in the group, once you get to $2,500 of value in your account, you can actually invest it like your 403B or your 401Ks or any of your other investment tools you have. Anything it earns stays in the account and can be used to pay for your health care. So it's got a lot of flexibility for you to use it the way you want. The investment features are all handled on the web portal. If they haven't been on the web portal, we want to get you out there, and we want to obviously have you get familiar with it, get the activity in there that you can get, and obviously make your rebalancing or investment choices if you're in the mindset of making investments. By the way, that's not mandatory that you invest. Some of us like to do that kind of thing. You can do very conservative investments, or you can be more aggressive with your money, depending on how you sit in the investment spectrum. Okay? HSA bank account, if you have questions about that, come see us. It's a complicated issue, but we'll try and simplify your decision for you as well. So which medical plan is right for us? Everybody's going to have a little different profile. You've got option 1, that's the PPO without the $0 copay labs and x-rays. Option 2, the only difference is that $0 LXR, which is lab and x-ray. So if you're having a lot of those, consider PPO option 2. Third option is the HSA that we just talked about as well. So what am I giving up if I go to the HSA? That's kind of a question I get often from people. Your PPO, if you go see a doctor and you have the PPO plan, you will just simply pay a copay, a $35 copay for your primary care physician. The difference on the HSA is while you have an HSA plan and you have the same doctor available to you as an in-network provider, the charge that you'll be given is not $35, it'll be the actual contracted value that that doctor charges Aetna, which is typically around $75 for a primary care visit. You'll pay for that using your HSA bank account. Okay, that's the key. That's where you want to see. So if you're going to the doctor often, would I want the HSA or would I want the PPO potentially? I might want the PPO, right? Because the copay protects me from paying a lot of money. If you don't go to the doctor, I said if you're a low utilizer and you want lower premiums, consider the HSA and the investment account. So I think that's really the focus that we like to point you towards as the key difference. A primary care physician is $35, a specialist is $75 on both PPO plans. The HSA is going to cost you $75 for a primary care physician, that's your normal doctor, but let's say you have to go see the orthopedic specialist because you tore your knee up pretty bad. That's probably a $200, $225 charge. It'll all go to your deductible on the HSA plan. That is a key difference between the two strategies. So remind yourself of that when you're making your choices between those two options. All right, we did some scenarios here as I was talking to you. Option 1, if you're limited to copays or you just want protection of catastrophic events, copays is the key word there. If I like my copays for doctor's visits, what are the other big copays from? Prescriptions, right? Prescriptions are another big copay event in your plan. Either of those copay scenarios, you might want to strongly lean towards the PPO or one of the two PPOs. They both have the same benefit. If you have a lot of labs or x-rays that you incur every year, maybe you're tracking your diabetes, maybe you're going in for some other tracking for an event you had going on with one of the organ deficiencies. Those recurring labs are costing you, because it goes probably $325 to $350 per event to your deductible. You join PPO Plan 2, it's $0. So it saves you that $325 deductible charge if you will. Okay? Consider PPO 2 if you're having those high volume lab or x-ray events. It's really it's the only significant difference between the plans. They're the identical plan with that exception. Option 3, this is your low utilizers again. It's all of us guys who maybe only insure ourselves. We never go to the doctor. And we want to get the money from the city for the seed money and the matching money to build some value in a bank account for yourself. Consider the HSA as an option that might be viable for you. It'll also give you a lower payroll deduction by a few dollars. So it costs you less out of your check. Okay? Those are very tough choices for all of you to make, because for us in the business, it's an easy comparison. But we just gave you a lot of comparisons there to consider. And again, if you think you are not sure what to do, come talk to one of us before you leave today. We'll try and help you through that decision as well. Okay, couple of new things going on here. We're going to talk about dental, vision, life, and disability plans. We've got some new products in there, and we've got some existing products that are changing slightly. We've had Aetna Dental. We're keeping Aetna Dental. It's a nice product. It's basically 100% covered for preventative care. That's your annual recurring events twice per year, preventative. That's going to be obviously get your cleanings and do other things to it. Basic services are covered at 80%. That's your fillings, maybe any kind of root canal therapies you might have, things like that. And then the majors are going to be obviously covered at 50%. And those are a little bit more of the implants, crowns, those kinds of onlays, inlays, those kinds of more expensive procedures. They'll cover 50. There is a $1,000 one-time lifetime ortho benefit on the dental plan. So for your children, if you're going into ortho, this is a plan that's going to pay $1,000 of that ortho bill. Now we know that costs more than $1,000 in today's world. So it's multiple thousands typically, but it gives you at least a little bit of benefit, one time per lifetime, and it's not for adult ortho, unfortunately, only for kids that are under that 21 years old. The maximum benefit you can get from the plan is $2,000 per person. That's actually a nice amount of money to spend on dental if you do have those events. It doesn't mean, the thing I'd like to point out on this is there's in-network doctors and there's out-of-network doctors. We did a comparison, John, maybe you can help me out here. We did a comparison, we took the local doctors, I don't know how many are local that you're going to and how many are actually out of the area. What did you find out on the local doctors?
Well, the local doctors are in the network, the dentists, I should say.
Okay.
If anybody goes over to my neck of the woods, Safford, Thatcher area, there's quite a few doctors that participate there. We've got them in Sierra Vista, Tucson.
Good. What we found is there was actually good coverage. We have, in the assessment that we made, we've eliminated the principal plan. So the only dental plan that's offered this year is going to be the Aetna Dental Plan. But we made the decision because we actually lowered the cost by about 11% from last year. We offer this plan because it's more efficient, lower cost, and the doctors and providers are the same. This also had a higher maximum benefit, $2,000 as compared to $1,000 on the principal plan. So principal dental is gone. Principal dental is gone. If you run principal, this will be your option for dental this year. Okay? If you have questions on providers or other things, come see us as well. One thing I'd like to point out, in network versus out of network, if you go out of network, the one key difference is for dentists, they have the right to do what they call balance billing because they're not under the contract with Aetna. They may honor your benefits, but any amounts in excess of the contract value, they may send you a bill for it. So we like to use in-network dentists all the time. That's the key element. I think we've been able to do that pretty well. From the trends we see, you're selecting in-network dentists, which is good. That's what you want to keep up. Okay, next slide. VSP Vision has stayed the same. No changes to the vision plan. I see a lot of glasses. There's probably some contacts I can't see. Nothing has changed in the VSP Vision plan. This is also a voluntary option. You can elect it if you would like to. It gives you frame allowance of $130. Every other year you can get a frame in this program. So use that. If you don't have money available on the frames here, or you want a second frame, what should you use? You should get in that FSA program, right? Or HSA program. It'll help you pay for that with pre-tax dollars. Next slide. Okay, the city does offer you basic life insurance. One key provision here. We have made a change from principal to standard life. There's a couple of reasons we did those changes. It's not going to be felt by you, but I'll give you the backstory on that. It's a little less expensive for you to have the same coverage as you had before. So you're going to see those adjustments come through in your payroll check in the process that you see deducted from your account. In the case of basic life, that's city paid. They pay the whole premium. You get $20,000 of life insurance. You also get this accident, death, and dismemberment benefit, which means if you have an injury that permanently disables you in some way, you'll get some reimbursement for that as well. So those programs are the same, other than they've moved from principal to the standard, another 5-star AAA rated life insurance company. Okay? Next. Voluntary life. Some of you all have made elections to purchase more life insurance than what city offers you as part of their benefit plan. If you had principal life insurance in excess of the city funded amount, all of those values will transfer automatically to standard without any health questionnaires or questions. It's going to happen automatically. Both companies were great companies. Standard will pick it up, and you'll actually see on the voluntary side the costs were a little bit lower. So you'll probably see a savings if you're seeing that come out of your check from paycheck to paycheck. Again, those are not going to be impacting you at all. And for this year, any of you that have not had life insurance, this is important. You have a one-time opportunity to get what they call a guaranteed issue of $100,000 without any health questionnaire. So, why is the health questionnaire important? Those of us that are battling healthcare events, if you fill out an underwriter's questionnaire, you say, well, I had cancer 2 years ago. Most companies will not write that policy. We put into the program for this 1 year, this first year launch, this guaranteed issue provision. Even if you have those events, you can get up to $100,000 of life insurance, no questions asked. So that's very valuable if you have what we call pre-existing conditions. Life insurance is hard to get if you've been sick. This gives you at least some protection for those purposes. If you have $100,000 already, obviously the guaranteed issue is not that big of a value to you, but you can purchase additional elements, additional increments this year, and obviously there would be some evidence of insurance required. You would have health questionnaires on those. You can get up to $300,000 of life insurance through the program. Okay? Spouses, well, here's your increments here. I'm sorry, I jumped over that. If you have $100,000 or more, you can purchase. You get automatically $10,000 additional each year if you like it. So you can go step up automatically. Spouses can also be insured under the plan. They have a guaranteed issue of $25,000. They have an increment up to $100,000 of total coverage in increments of $5,000. And children can also be insured as well. Next one. Okay. So what I want to emphasize one thing before we go on to this. If you just give me your attention one more minute. The life insurance moving from principal to the standard, a little less expensive, a chance to get in if you're not in without any health questionnaire. You have to enroll now. It's very important. If you pass on this now and you come back later and say, I'd like that $100,000 now, you're not going to be able to get in with a guaranteed issue. You'll have to do a health questionnaire. This is literally a one-time opportunity to get your family protected in the event we have a terrible event of one of us, losing our opportunity to be on Earth. Okay? Try and think about that today. I know it's one of those things you hate to think about life insurance. None of us want to be considered in a status where we might have to disappear, but protect your family if you have them and get that program going if you can. You're going to be able to enroll right online, right in your open enrollment window. Okay, let's switch gears a little bit. You heard some of the other organizations here. They're offering you different types of disability options. The city, through standard, they've offered you a short-term disability plan as well. This is voluntary. You don't have to participate in it if you don't want to. The most important thing every one of us has is our ability to go to work and our ability to collect a check, right? And when we get hurt or we can't work for whatever reason, even if it's just pregnancy, we end up going without our paycheck sometimes because we may run out of PTO and vacation time. Short-term disability will pay you 60% of what you earn up to a maximum of $1,000 per week, so roughly $4,000 a month, if you have a disability. The worst thing that can happen when you get sick or you can't work is not being able to pay your mortgage, or your bills, your car loan, or anything else for the kids. This is protection for you should that event ever occur. It is voluntary, it will cost you some money. That dollar amount will be determined based on your age. It's an age-rated table. The older we get, the worse it is, quite frankly. You get higher prices, okay? Just the way it works. Short-term disability, back up please. Again, you're getting up to $1,000 a week. It'll cover you for 90 days. 90 days is the short-term policy. You have to wait 7 days, called the waiting period, and if the disability continues, it will kick in, and obviously will help you get through that claim. This is voluntary. It will be a payroll deducted amount. Okay, next slide now. Thank you. All right, back to some resources. You've seen this before. If you haven't been on the portal, you get a smartphone tool. Most of us have become smartphone users. You can have access to all of your information on the smartphone, or you can just go onto the website and see your information there as well. I was made aware, just yesterday as a matter of fact, some of you that have HSA accounts have never gone online. We had 10 or 12 of you, and if you think you haven't gone online and you have one of those accounts, come see us. We'll help you get online. There's a reason that's important. If you don't activate your account, the money that's in there is sort of semi-frozen. I was just made aware of this yesterday. It requires us to log you on, check a box that you're on, and they can verify your identity, and then the funds are opened up to you. We have to comply with something that's called the Patriot Act. I know all the law enforcement guys know what that is. But this is basically verifying that there's not money laundering going on through your accounts. It's a banking issue. This is literally, an HSA account is literally a bank account in your name. So if you don't verify who you are, those funds are just sitting out there and you can't access them. So if you think you have an HSA and you've never gone online, come see us before you leave. We'll make sure we get you written down for a follow-up on that as well. The app obviously does all those things. You're going to get a debit card. I usually have mine with, I don't have it in my pocket, but it works like a Visa or any other credit card would work. Go ahead. Okay. Now, how do we enroll this year? You went through a process last year of online enrollment with a product we call Employee Navigator. You're going to do the same thing this year. We've set all the plans out there. Every choice you make will be made online. We do that online because there's no loss of information when we move that to the insurance carrier. Okay? We need you to do it online. You've received already this morning an invite into your email account to come join us online. You'll make selections of your medical plan, your dental plan, your voluntary. You'll either waive it or accept it or choose between the plans. Everything's done online. So we want you to obviously get out there, look for your email in your email boxes. We had an email on everybody's account. If you did not receive it, come see us. We're going to check that email again, make sure it gets to you. You can click on the link. It'll open up that window. If you had an account last year, which all of you did, you actually enrolled this way last year, and you don't remember your password, there's the ability to reset your password right there. Okay? Navigator is going to be our tool. You'll see a couple of signs and you'll see some sign-offs that you're going to have to give, but I think it's pretty self-explanatory. We will be here to help you navigate that if you want to do that right on site with us. We will be here today to do that. Stop by after the meeting or whenever it's good for you. All right, this one I actually didn't know if we got approval on. How about a June? Is that okay? We have set a deadline of June 19th to get your elections in. If you don't elect, you won't have coverage, is what it comes down to. You gotta get online and elect. These are fed to the carriers electronically. If you're not in there and that feed goes out without you in it, you won't have coverage. So we're encouraging you to obviously come online, do the process with us. If you have issues, come see us. Let us know exactly what challenge you're having, and we'll get you through the process of getting enrolled. Okay, ton of information. I get it. A lot of details, a lot of data. If you have questions or you didn't follow what I was trying to convey to you, please come see us. We're not scary. We'll help you get through it. Okay? Oh, just was told by our team, there's a benefit highlight guide on Navigator that goes over all these topics in a short form. These will help you organize your thinking about each of the decisions you're going to make. Okay? Again, thank you, Chief, and thank you all for your time today. These are confusing choices, I know. I understand that for us in the business, it's a no-brainer. For all of you, don't be embarrassed, come talk to us. Come talk to us, we will help you get through the tough choices you have to make. Thank you so much for your time today.